Welcome to the last, but very much not least, panel of the day on this particular stage. And this is going to be the most exciting panel, am I right? Because this is, we're talking about technologies that are fundamentally changing the way that we are experiencing not just our relationship with finance and currency, but also how we interact with each other generally online. And I can't be more happy and honored to be joined on this fantastic panel with these experts. So my name is Jo Eyre. I'm the MD and founder of Voxeon Communications. We help tech startups with their PR and marketing, particularly in the Web3 space. I have done my time in the both AAA and Web3 gaming space, and so I'm very much a geek in that regard, and I cannot wait to just get stuck in. So I'm going to introduce each of our panelists, and I'll let them introduce themselves as well after. But we have Noelyne Sumba here, and Noelyne is very much a hardcore Bitcoin advocate, right? You could say that, yeah? Oh.
Yes.
Yes, good. So she works with Machankura. It's a platform that lets people send and receive Bitcoin with no internet access. So I'm looking forward to getting to Lightning and the promise of that for this part of the world. But she's also been translating Bitcoin books into Kiswahili, which is fantastic. Localization is a really important topic as we go through this. We then have Yvonne Kagondu over there. And Yvonne is the co-founder of East Africa Hub. And she's really leading the change in the Web3 education and developer empowerment space. She's all about getting young people, am I right, into Bitcoin, not just so that they're informed, but actually so that they can solve real problems with real local solutions. And finally, we have Felix Macharia over there. Felix is the CEO and co-founder of Kotani Pay, which is really making blockchain-based financial services way more accessible for people across Africa. And he's been in the space for a long time. I don't mean that in a rude way, but in a good way. You are wise. You have been doing this for a while, working on everything from blockchain policy through to staking networks and beyond. So a fantastic lineup of people. But I'd like to give each of our panelists a chance to go to a little bit of their expertise. So if you wouldn't mind introducing yourself in a bit more depth and telling us a bit more about why this space is so exciting for you.
Okay, thank you so much, Jo. So my name is Noelyne Sumba. I have been working in the Bitcoin space for the past 3 years. The company I work with is called Machankura. It's a custodial Bitcoin wallet. It's integrated Lightning onto USSD. It enables sending and receiving of Bitcoin with or without internet connection. So the without internet connection is through the integration on USSD. It's currently operational in 7 African countries. That is for the USSD. But we've also enabled it onto the WhatsApp platform. So you can also be able to access it globally through WhatsApp in countries that allow you to, that have conducive Bitcoin regulations. So I guess that's more what I can say. Otherwise, I also do Bitcoin translation. I feel Bitcoin as a concept is very difficult for those who have not been exposed to finance to understand why it's crucial for us to have, maybe a different financial system for the one that's currently in existence. And education plays a key role to making people understand. And most of the jargons are in English, and I focus mostly on grassroots adoption. And to reach this population, you have to get this knowledge in Kiswahili. So I have done also a bit of translation of Bitcoin content to Swahili. And so I focus mostly on the education aspect and onboarding through Machankura. Yeah.
Fantastic. Yvonne.
Okay, thank you very much. I'm honored to be here. So my name is Yvonne Kagondu. I am the founder of ICP Hub Kenya. ICP is Internet Computer Protocol, which is a layer 1 blockchain. We have about 30 hubs all over the world. We have 4 in Africa, in Nigeria, Ghana, South Africa, we have in US, we have in Paris, we have in UK. They are spread out all over the world, so we are very decentralized. And what we do is that we focus on evangelizing, educating, incubating, and launching products on the Internet Computer Protocol. And currently in Kenya, we are the largest blockchain developer community. And also globally, we're the highest, we have the blockchain with the highest developer activity so far. And also at ICP Hub Kenya, we offer blockchain software development services. So in case you're looking for someone to integrate blockchain into your product, we're here to help. Thank you.
Thanks, Yvonne. Felix.
Thank you. I'm Felix Macharia, CEO and co-founder at Kotani Pay. Kotani Pay is a licensed crypto asset service provider, live now in 7 countries. Our main focus is to bring Africa on chain, and we do this by bridging local currencies to cryptocurrencies. So we build the infrastructure on the local payment side, as well as provide liquidity to businesses so they can bridge from local currencies to cryptocurrencies. I've been in the space, at least as a practitioner, in Africa from 2017. So I've seen the space evolve from being very niche to actually being very mainstream. I was a university student then. I'm a dad now, so it's been an exciting journey.
And which is more complicated, being a dad or blockchain? Being a dad, right? Yeah, definitely. That's great. Thank you and welcome. So, Noelyne, I'd like to dig into your experience a little bit of working at the grassroots. And you're probably working with people that have never really experienced working with crypto and Bitcoin before. What are some of the reactions you get, and what are some of the challenges of actually doing that?
So I've lived in the coast a bit. I've mentioned I lived in Kilifi, and one of in my previous job I used to work with taxation and onboarding people into taxation. And one of the challenges I realized is people do not have information on how so maybe the government works in terms of finances. So one major challenge is that there is just simply no knowledge, no financial knowledge accessible to especially most of these people. One of the barriers, of course, is because of the language barrier. And so when you're going to such a person who does not even have a bank account and you're trying to explain to them that there's a new financial system, where if they've heard about Bitcoin, they think of it as a scam. So that's one major challenge. When Bitcoin came into the scene in Kenya, I remember hearing of it for the very first time in 2015. There are lots of scams, mining scams that came with it. So a lot of people still have that misconception that you are trying to scam them. In Kenya, there is a term called wash, whereby people live extravagant lives, flashy lives, displaying money. So people have this perception that you're coming to scam them. So that's one challenge that we have to, I have had to tackle with. And so when I'm teaching about Bitcoin, I have to start with the process of educating them about the current financial system so that I can be able to now introduce them to the concept of Bitcoin. So I can say maybe scam has been the major challenge that we're having, and they're still ongoing, funny thing. So yeah.
Yeah, I think trust is a huge topic, and I've heard it mentioned a lot of times, which is somewhat ironic when we're talking about trustless technologies. But I think it's something that has come up again and again. And for you, Yvonne, when you're digging into more of the developer space, what are some of the misconceptions that you're dealing with regards to blockchain and Web3 adoption?
Well, first of all, I have to say the market is really untapped. I also joined the space around the same time with Felix, around 2017, 2018, and around that time, Africa in general, that's the big four, Nigeria, Ghana, Kenya, and South Africa, we were second largest adopters of cryptocurrencies. So we are primarily consumers of cryptocurrencies. So we realized with quite a number of people, I'm sure also Felix knows, that we were mostly consuming cryptocurrencies. And it's important because cryptocurrencies really broke sort of the borders of monetization. I can imagine, I don't know if anyone in the audience has ever tried sending money through a bank from one country to the other. Has anyone? Anyone? Yeah? And how difficult it is. It's really difficult. It's really expensive. I've had situations where money has gotten lost in the process. So with cryptocurrencies, it's really addressed a challenge, especially in countries like Nigeria, where remittances are very high, in Kenya, where we have a very wide and large amount of freelancers who receive money from abroad. So we went through a phase of consumption of cryptocurrencies, especially Bitcoin. People are using it often, but then we came back and realized that we were not building. Like if you look at around 2017, we had what we call the ICO boom, where a lot of people are doing initial coin offerings, and it was happening very often in Asian countries. But in Africa, we didn't really have much happening around that period. So we came to the realization that we were not building enough. Africans were just consuming, we're not building. We're not launching products, we're not listing coins, we're just taking Bitcoin, consuming Bitcoin, using the money, which is amazing. For sure, it's amazing, but we really need to contribute more. And that's a challenge that we're facing as ICP Hub. We try to address as ICP Hub Kenya. We went to various universities, partnered with so many universities in the country, formally and informally. We taught a lot of Web2 developers on how they can integrate Web3. And we got a lot of we certified nearly 1,000 developers, Web2 developers into Web3. Now, we've gotten to a phase, misconception, I can say maybe a challenge that we faced is getting those developers to get into the entrepreneur mindset, where you're just not coding, but you're building, you're marketing, you're making money through your product, and you're having people use your product. So, yeah, that's what I'd say.
That's so interesting. And for you, Felix, having been in the space for a long time, and you mentioned seeing it go from very niche to somewhat mainstream, let's go into that in a little bit more detail. What are the big shifts that you've seen, and both on the positive and perhaps on the more negative side?
Yeah, it's a good question. I think the biggest adoption, curve that we have seen, at least in Africa, is the adoption of stable coins. I was here last year on a panel, and I was just saying we have gone full circle. From FTX failing all the way to stablecoins doing perhaps more volume than Visa and MasterCard as networks, and those are very robust networks. The thing that I think has brought a lot of VCs and startups to the space is acquisition of, Stripe's acquisition of Bridge, $1 billion. If you look at businesses like Kotani Pay and others that started as very small businesses, most of them now do upwards of $100 million in volume. And that's just a wave that's lifting all boats. And if you look at what stablecoin, adoption in Africa was like in 2017, it was very low. So in 2017, Binance launches, and people are just, starting to learn how exchanges work. There is a lot of fear, uncertainty, doubt over the, centralized exchanges. I think Binance stood the test of time. It had these issues, around compliance, but it ended up being the biggest distribution network for cryptocurrencies, at least in the emerging markets. So that was a fundamental piece that was missing in 2017 that we take for granted today. There was no established stablecoin. I think USDT and, to some extent also USDC, standing the test of time in terms of the various crises. So there was the shorting of USDT that never worked. There was it's not backed by anything. They couldn't prove the money that they have. They provided attestations. There was they're probably invested in very risky assets. So they probably invested in Evergrande or 30-year municipal bonds. It turned out that it was actually banks in the US that had done that, and they had a very solid balance sheet. And now you hear a lot around, they enable illicit activities through USDT, and we'll see how that, how that evolves, although we know they work very closely with the likes of Chainalysis. So I think having established stablecoins like USDC and USDT was the second foundation layer. And so those two things, in addition to on-ramp off-ramps that tend to be, on-ramp off-ramps tend to be local companies enabling the bridging of local currencies to stable coins, now solved three problems for end users. So if you look at the continent now, we face a dollar shortage problem. Some of our governments took a lot of loans, all of them dollar denominated. Our banking systems prioritize those governments over business. And so if you're a business that's looking for dollars, sometimes it's very hard to get it in the banking system. The alternative for you definitely is stablecoins. The second one is currency volatility. Bad choices on the fiscal side lead to sliding of currencies, and people look at this and they're like, I need to protect myself. Stablecoin solve that problem for you. If you can bridge from your local currency to your stablecoin, then it does that for you. And then finally is payments fragmentation. We don't talk about this enough, which is you have virtual monopolies in each and every one of these African countries. In Kenya, it's M-Pesa. I hear people talk about financial inclusion all the time. That is done. M-Pesa has done it. Anyone with a SIM card can connect to financial services. We don't need to talk about that anymore. You can connect to savings, you can connect to loans, right? And because of these virtual monopolies, M-Pesa doesn't have any incentive to work with or interoperate with another player. Say, for example, a Nigerian player or Ugandan player. And so it becomes very hard, even in the presence of mobile money networks, to send money cross-border. Stablecoins solve the payments fragmentation problem for you because it's the easiest way for me to send money to my friend in Tata. So in Nigeria. So we've seen this evolution of infrastructure being established, distribution network, stablecoins, on-ramp, off-ramp, and they solve actual problems, and that's why you're seeing a lot of businesses and individuals shifting into this new space. It was very hard to get payment service providers 2-3 years ago talking about stablecoins as part of their settlement mix. All of them right now are talking about stablecoins as part of their settlement mix.
And I don't think it would be a blockchain discussion if we didn't talk about regulation, right? So talking about stablecoins specifically and the fact that, Kotani Pay is going into new markets seemingly quite regularly, how are you overcoming some of that? Are we seeing a positive movement towards a better regulatory environment for us?
Yeah, so I would say we're in a much better place than we were a long time ago. At least in the case of Kenya, we had a central bank governor who said he will not regulate crypto because when he worked at the IMF, Bitcoin was what was being used for human trafficking and sex trafficking. And so at least in the case of Kenya, everything was frozen for about 5 to 6 years, where people didn't know whether this is going to be passed, is it going to be prohibited, is it going to be, allowed. Several things happened. One was there was the adoption of WorldCoin for some reason across Kenya. WorldCoin had 650,000 users from Kenya. And of course, the government got very concerned about actual data, data protection and things like that. Secondly, Kenya was grey listed by the Financial Action Task Force. And one of the reasons for the grey listing was that we were not regulating crypto at all, and so it could be used for illicit activity. We were given, at least, there's an East African money laundering group that gave us two choices. Do you want to prohibit it? Do you want to regulate it? And Kenya chose to regulate it. And so over the last 2 years, there has been push and pull between regulators, industry, and other people, and finally, we have a policy document from the National Treasury on how virtual asset service providers will be regulated in Kenya, licensing for virtual asset service providers, requirements for all of them. If you look at South Africa, where we hold a license, they're probably 2 or 3 years ahead of Kenya. And if you look globally, there's just a general acceptance that these are assets. So we stopped calling them currencies anymore. People call them assets now. Bitcoin is now entering into the phase where it's being seen as a strategic reserve. I think it is the Financial Times this morning that was talking about crypto venture funds in the US getting a flood of requests from endowment funds and from the big institutional funds, simply because you have an ETF now, it's accepted. There is a path as to how this can be regulated. When you think about regulation, you're largely thinking about three things. You're thinking about consumer protection, right? So you don't want people to invest in something and then lose their assets. The only way to protect them is to regulate, like get these exchanges and wallets and everybody else who's custodying assets to, follow a particular set of standards. You're thinking about illicit activity. That's why we have compliance checks. That's why we have customer due diligence. That's why we have enhanced due diligence. You have stability and monetary risk questions. Again, that's why you need oversight over stable coins. That's why you need oversight over custodial, custodial assets. So I'll say we are in a better place than we were in 2017.
Okay, I'd like to, in terms of, there was an earlier panel, and I had one of the panelists talking about when it comes to regulation, as a company, it's best for you to use the front door when dealing with the government instead of using the back door, because it doesn't end well for companies. But I would like to talk about Bitcoin. And when we talk about Bitcoin needing oversight, we have to realize that Bitcoin is already cryptographically secured. And also, its decentralization aspect releases or rather eliminates the need for trust. So when we talk about oversight on Bitcoin, it's already verifiable on the blockchain. You can be able to tell that. And when it comes to the aspect of protecting users, maybe we can look at education instead, so that we can be able to encourage best practices among people. I am a fan of community education. It's great to have here an app called Fedi. There's Obi Nusu in the crowd, Obi. So with Fedi, they focus on community education and community custody of Bitcoin. That way there is a trust system. You are custodying Bitcoin among people whom you already know each other, whether you're selling or buying, it's already within people that you know each other, and that way you can be able to eliminate cases where there is bad practices among users. So, and also when you talk about money laundering, the need for regulation, I'm so sure the government pitches money laundering as a reason. But when you look at the fiat system, and this is according to a UN report, there's around $2 trillion that has been laundered. And if you compare this, for example, in cryptocurrencies, that's around $22 billion, if I'm not wrong. So when we talk about regulation, it's more for the fiat system and not for the Bitcoin ecosystem or the cryptocurrency ecosystem that needs it. And when we talk about KYC, I feel it's more of to protect legacy companies. So best practice should be encouraged among consumers. And I feel like if you can be able to educate them, if you can show them the transparency that the Bitcoin, the blockchain itself offers, we can be able to probably avoid the need to have government stifling innovation through the regulations that they impose. Yeah.
That's really good insight there. And Yvonne, have you got anything further to add from the regulatory standpoint and how you've worked?
Well, the two speakers have really spoken well, but since I'm in the innovation side of blockchain, I'd really say that innovation comes before regulation. So we need to, I genuinely believe that we need to innovate more, and the government needs to work with us to ensure that we innovate more. The challenge that I'm seeing with African countries that, as I said, we've not really launched enough, and we keep on talking about regulation, yet the products that we're building are not getting enough adaptation. They're not really making it to global markets. So what maybe I'd encourage the audience is to maybe work with, join us on this journey of putting Africa to a level where we can, talk about regulation in a sense of, can we regulate I'm pro-regulation, unfortunately. I do believe that that we live in a society, we live in a community. At the end of the day, there are usually bad players and good players. So I do believe that there is a need of regulation, but we still need to work hand in hand with the government to ensure that we are not left behind. For example, I don't think we can talk about Africa Tech Summit without talking about AI. For example, what's happening with AI, how people are adapting really fast. And there's a speaker I was listening to, and he said that there was a time when there was the Neanderthal man and the Homo sapien, and they were all competing. But the Neanderthal man became extinct because he couldn't adapt fast enough. So with Africa, we have a culture of saying, in Kenya we say serikali saidia, government help us. If we don't adapt fast enough, we keep on waiting for the government to regulate us, government to guide us. Truly, with how fast AI and blockchain are coming into the space, we won't be able to catch up fast enough. So maybe I'd encourage all of us to think innovation first, regulation, and the government work with us, please, but regulation should be after.
Yeah, 100%. Innovation's always going to come first, and it's, the government's just going to have to keep up, because we're not stopping. One thing I'd like to touch on a bit, and it came up on a previous panel earlier, and it's something I think about a lot when I'm thinking about taking quite complex concepts and making them understandable. You know, you use the example of AI then, which has just been adopted massively over the past few years. And a lot of people say, you know, people don't use cryptocurrencies because they don't understand them. And I like to ask, how much do people need to understand? And I think you may have some interesting insights on this, particularly, Noelyne. But, you know, when I log onto the internet, I don't know every last thing that's happening in order for me to do that. I just know what it gives me. I know how to do it and how I can benefit from it. I want to know that my information is somewhat safe. I need certain assurances. But how much do people really need to know, and how do we get them there?
So there's usually something we say. I personally do not know the back end of a banking system. I have no idea. All I know is I have to go, maybe if I want to transfer funds, if I want to use an RTGS or SWIFT, I just know I go to the bank and I give them the details and they facilitate it on the back end. And I'm looking at a future where we actually get to that point whereby you don't really have to understand everything that goes on in the back end of Bitcoin. As long as you know your funds are secure and you can be able to transfer it instantly and at a cheap amount. So I can use us as an example. We use the Lightning Network. So our Machankura wallet has integrated the Lightning Network. Maybe for those who are not familiar with it, the Lightning Network is the layer 2 on Bitcoin. So the layer 1, the on-chain of Bitcoin, if you're not maybe aware about it, it validates transactions every 10 minutes. So it is not suitable for payments. And it can only transact around 7 transactions per second. And so there was a need for settlement, fast settlement layer, and that's how the Lightning Network came about. And with the Lightning Network, it's faster, it's cheaper, you can be able to transfer value in any area in the world, and it's only a fraction of a cent sometimes. You can transfer billions and pay even probably less than $1, let's hope. I can put that as an example, but actually it's fractions of a cent when transacting using Lightning. And for a user, for them, if they're looking to transact and they look at the cheapest option they can be able to use and how fast it settles, they don't really need to understand how the Lightning Network works. And I guess that's not really necessary, as long as you can guarantee them security and maybe the objective is completed, rather. So in terms of, I think that's
I just think that we need to make, so I think the problem with Web3 has been the messaging problem, which is coming from two sides. One is that we build in the open. A lot of these protocols are open source. Two is that, it's decentralized. We emphasize so much about the decentralization aspect and the ownership aspect. And I think those two things have meant that we have, within the space, for a very long time, hated centralized platforms that want to capture all the users in the space. The problem with that is you now end up with a lot of fragmentation. You also end up with a lot of confusion. You end up with a lot of terms, and they're almost like new terms every other day. I think all we have to do is, to Noelyne's point, make it easy to use, make it safe to use, and make it available. And part of that might require that we have centralized players.
Please, could you repeat the question?
Say again?
Please repeat the question.
So I was asking about how much people really need to understand for us to drive adoption, basically.
Oh, okay. Well, maybe I could just give some statistics. The highest adopters of cryptocurrencies so far have been emerging economies, with the leading one being India, second Nigeria, then it goes to countries like Venezuela. Kenya comes in at number 10. So we find that it's the reason for the fast adoption of cryptocurrencies in these regions is necessity, because it's only in cryptocurrencies where you can send money in seconds at the cheapest cheapest price all over the world. I don't know how many of you have used M-Pesa here. M-Pesa, yeah. So crypto is like M-Pesa without Safaricom, simply. So, and I think M-Pesa was quite easy to use. So I don't really think there's a concept of how do we really need to understand, because most of us who use M-Pesa don't really know. I was shocked one time, we had a speaker from M-Pesa and he told us, do you know that M-Pesa experiences about 5,000 hacks per second, hack attempts. We don't really know what's happening in M-Pesa. We just know how it serves us. So the same thing for cryptocurrencies. For emerging economies, we know that we have the need for remittances. We have the issue of expensive cash transfer. Our currency is devaluing very fast. Basically, our money really works against us. So there's the necessity side of it. So I generally believe we don't really need to get to the nitty-gritties, but also, as Felix said, we need to, as builders, as innovators, we need to make cryptocurrencies and Web3 technology as easy, and the UX needs to be as easy as possible for users to understand so that we can all adopt it.
I'd like to agree with Yvonne on that. Sorry, it would be a disservice to leave here without talking about M-Pesa. And for M-Pesa, it's incredible because one of the questions I used to receive was, is it coming to replace M-Pesa in the country? And right now, maybe I would advise you can go and try out an app called Tando that has enabled, you can now spend Bitcoin directly from your wallet to payment through till number, to a phone number, using Tando, and nobody has to know that you are using Bitcoin in the background. So the ease of use, it's actually being encouraged through innovation.
What was the name of that app again?
Tando app. Yeah, so with Tando, you don't even require to register the app. Pretty easy, no KYC, and with that, using Lightning Network, you can pay any merchant and they don't have to know that you have Bitcoin in the background. So for those of you, I'm so sure there's a lot of people who earn in Bitcoin and they're looking for ways to spend. The major challenge we've had is merchant adoption. Merchants are not willing to accept Bitcoin as a result of government not having use of regulation. And for those of you who are, or rather those of us who receive payments in Bitcoin and would like to spend it in our countries, so Tando has been good integrating with M-Pesa, and it's been fantastic using it here.
And that's my point exactly. So like crypto people can't have their cake and eat it. You can't insist on privacy. You can't insist on not following rules and still expect mass adoption. If I'm a big retailer and I'm a big merchant, why would I process for customers who are not KYC'd, right? So as much as we want to be philosophically right, we all hate levels of control. That's why I think majority of societies prefer democracy over, a monarchy or something else. There's still a place for rules, and rules are meant to protect us from bad actors, right? So let's come to terms with reality. Platforms like Binance are centralized. They have enabled the distribution of cryptocurrencies across the world, including Bitcoin. Tether is a centralized stablecoin. It has enabled payments across the world. If we keep on sticking to our fundamental decentralized utopia, there's going to be very little adoption of the technology globally. And basically, it's been 13 years now. So it's kind of obvious the direction in which we're headed. The technology is great, but how we present it to end users needs to change.
Which is a really nice segue to a question on a bit of future casting. Like, what are we seeing? And when we talk about these technologies, it's, as you say, it's not the technology itself that changes the world, it's how it's applied, it's how it's brought to market. So I'd love to get a feel from each of you about, in the next kind of 5 years or so, what are we looking at? What are we looking at in terms of how it's actually going to change things for individuals and businesses on the continent?
So how it's going to change things. So I look at Bitcoin as a way of solving an issue we've had in Africa for quite some time. Doesn't make sense that 80% of our transactions are being settled outside of the continent. I will still keep on talking about that. So the delay of the settlements and the transaction costs involved in the settlements, I believe we'll be getting rid of that in the near future. Also, in terms of the centralization aspect, I feel every time throughout history when government has had the opportunity to take advantage of the money distribution they have, that's the philosophy aspect of human greed. So we have to find a way in which you can be able to find a middle ground with government and working with government and enabling innovation. But also there's the aspect of the store of value. Our currencies have been devaluing at a very terrible rate. It's unfortunate countries like Zimbabwe, the citizens don't even want to use the Zimbabwean dollars. They are now using the dollar as a unit of account. Currencies are failing all over the continent, and we are not addressing this. And rushing to use the dollar, that's fine, but we still have to remember the dollar is being printed. The US has around, was it 30 trillion in terms of debt, if I'm not wrong. So it's still being printed. Inflation is still taking place. We are still working hard, and our value is being stolen. So the limited supply of Bitcoin offers us the opportunity for financial freedom, and I believe that's where we'll be heading towards the next future, and those who embrace it will be able to avoid the worst case scenario that comes with the devaluing of currencies and inflation. So yeah.
Okay, I can't really predict the future, but I can tell you what we are working on at ICP Hub Kenya for the next, our vision with the ICP Hubs network, especially ICP Hub Kenya. We want to see, as I mentioned, we want to see more innovation coming from Africa. As mentioned, we have 4 hubs in Africa. That's Nigeria, Ghana, Kenya, and South Africa. And we also have worked with countries like Zambia, Rwanda, and we've been training developers like crazy. Actually, there was a report that was launched last year, and ICP was that blockchain adopted in Africa, only after Ethereum and Solana, which are number 1 and 2 everywhere. So basically, we're number 1. Nice, but anyway, so what we are really pushing for is we want to see more innovation in the next 5 years. We want to see more young people because of our young generation. We want to see more young people coming into the blockchain ecosystem, coding on whatever chain that's available. Because right now, based on what the work we've been doing and also other chains, I've seen a lot of other blockchain companies coming into the continent, giving grants, investing in developers, giving trainers, hiring locally. So we've created a lot of jobs in the blockchain ecosystem, and those developers are able to provide services outside the country. Our hope is to become the next India in a way. So what I can say for the next 5 years, other than us transacting in cryptocurrencies, receiving payments in cryptocurrencies, we'll have more products coming from Africa, especially Kenya, from ICP Hub Kenya. And if you're open, any of you might be open to be working with us, and maybe you're looking for a developer service provider, you're looking to do campus tours or anything, we're open to working and getting partnerships from anyone and everyone. So I'd invite everyone to work with us and join us in this fifth industrial revolution journey. Yeah.
Yeah, and I just want to add on to what the other speakers have said. I think at a high level, Bitcoin has proven a very resilient network. It's very decentralized. There is no way of inflating the asset, at least not yet. So one of the things that I think I look forward to seeing from Africa is us using some of our great energy resources, everything from geothermal to hydro to solar, to participate in this network. And I think you have seen companies from gridless, to Chinese miners in Ethiopia actually doing this, right? We need more and more Africans using the energy that we have on the continent to tap into the Bitcoin network and actually use Bitcoin as a reserve asset. It can really help, a lot of countries on the continent. I think the skills part is very important. So you cannot, and the reason why I think a lot of tech has failed on the continent is because we are trying to provide tech solutions to economic problems. Economic problems can only be solved economically. Zimbabwe, for example, is a structural economic problem, right? There are solutions to that problem, but I think there's been a lot of resistance from the political class in that country. So even if you go with a technology solution that solves the problem, if the political class doesn't want the situation to change, it will not change. And so I think for us as a continent, we need to think about more of skills development. So we have a lot of young people. Most of them are connected to the internet, and that's why I support very much the work that Yvonne is doing. We need to move beyond just meetups and conferences. We need to deepen the level of skills all the way from university coming up, because all these businesses, mine included, and all the startups that I've seen here, depend on talent on the continent for us to grow, and become global, hopefully global companies. But if not global, Pan-African companies. On the stablecoin side, adoption, is now here. We don't all have to do cross-border FX, right? So I'm looking forward to seeing more on the stablecoin innovation side. I'll be engaging this year. I'm starting a podcast where we basically just interview people building on stablecoins and doing more stablecoin innovations called Unlock. So that will be coming out around April.
Fantastic. And I'd like to leave a few minutes for questions from the audience, if anybody has any. There's some over here. I don't know if we've got a mic. Yeah, it's on its way.
Hi, everyone. I don't know who's gonna answer me this question, but I just wanted to ask on a consumer-related question. One of the issues I think is faced by the Bitcoin world is irreversible transactions. And I feel like the most thing, the reason people prefer banks and the card payments is because the minute you do a wrong transaction, you're able to reverse your transaction. So on the innovation part, maybe, I would like to get an understanding of the panel. What are we doing in terms of safeguarding the funds for us as the clients on a consumer level? Thank you.
Well, I could speak for what we are doing at ICP Hub Kenya. we meet a lot of people with quite a number of interesting problems that they present to us. They tell us, like, that's an interesting problem. That's why we need to innovate. Come work with ICP Hub Kenya. We find a solution for this problem. How do we reverse blockchain transactions? Like the way M-Pesa for the longest time couldn't do that, but now they're able to. And of course, in the blockchain industry, we need to work faster. So I think that's a good problem to solve, and we can only solve as innovators. Let's find a solution for that. I don't know if in your...
Yeah, maybe just to say that, the purpose of a blockchain is to have immutable transactions that nobody can interfere with, and that's why it's irreversible. I think you can bake a lot of these things into the UI UX experience. That is, before somebody sends a transaction, have things that work as warning signposts along the way, and I think a lot of wallets have improved on this experience. So this is how much you're sending, this is where you're sending it to, this is the particular address that you're sending it to. Are you sure that you want to send this amount? And then finally, click on the final transaction. So there should be at least like 3 steps before somebody sends the funds. And then, of course, on the other side is customer or consumer education. If you're not so sure about the address that you're sending to, you could do a test amount. You could send 10 USDT. If the person receives it, you send the rest. So I think some of these things can be solved at the UI UX level.
Great. I think there was another question just here. Thank you.
Hello, my name is Jerry McHugh. Question to the panel is, what can we do to bring the benefits of the technology quicker to value to the customer? Chain analysis says that it costs 5.5% for a stable coin transfer in sub-Saharan Africa on a test transfer of $200. We know it costs fractions of a cent to actually execute. Why are the business models not bringing the value to customers that the technology can already enable? Thank you.
So maybe I can take that. So why is it difficult to bring that back to the customers? Maybe Felix will be able to handle on the USDT side. I'll take on the Lightning Network. So what the challenge you have with the Lightning Network in terms of the implementation, I can't say it's still perfect because we have different versions of it. So whether you're using a Clear or LND, so there are very many different implementations, and having that mainstream over different of our large population of people will still take time. And also, when you have protocol upgrades on Lightning, there's a protocol upgrade like splicing. So we'll need to get to a point whereby we have all the people using Lightning to be able to integrate it. And this takes a bit of time. In fact, when you work in Bitcoin, you realize how people usually disagree on a lot of things when it comes to protocols. So this is more humans agreeing for these implementations to be leveled across the field. So that's the challenge we've had on the development side, for the Lightning Network. So maybe Felix can handle on the USDT.
Yeah, I'm not a USDT spokesman. It's just that I interact with stablecoins, USDC, USDT, all of them, CUSD. Not all. So the way I view technologies is they can't solve all the problems. And perhaps the problem that stablecoins and blockchains are solving is not about cost. It's about convenience. It's about access. Think about the 3 problems that I spoke about that stablecoins currently solve. One is dollar scarcity. Unfortunately for us, it's still a reserve currency. You still need it to buy stuff. If you're importing anything, you still need the dollar, and there's not enough. And I keep on emphasizing this. There's not enough dollars on the continent. It's only stablecoins that can solve this for us, or are solving this for us right now. The second one is currency volatility. The third one is payments fragmentation. Notice, across those 3 problems, there is no cost or convenience discussion. But one of the things that I've noticed is as more and more companies come into the space and more companies are innovating, the costs are actually going down, right? So all this, the fees, we were charging 2 or so years ago are not the fees we're charging now. it's a race to the bottom. Even like, if you look at, launch markets. So people launch in Nigeria, for example, and they launch in Kenya, they launch in South Africa, but soon they have to go into other markets. They have to go into Rwanda, they have to go into Tanzania, places where they can actually make margins because they're making very little in some of these markets. So I guess, with greater competition, you get better prices, but I wouldn't say that, that was the problem that, stable coins or blockchains were solving at the beginning. It's probably a future benefit.
Excellent. And unfortunately, that ends off our wonderful panel. Thank you to the audience, and thank you to our wonderful panelists. Exciting times ahead.